something that you have to generally interact with. The sort of hacker impulse is going to explore these structures, work out the internal dynamics of them, and then find ways that you can start to subvert those internal dynamics, okay, and recombine them in new ways. So in the case of something like a hardware hacking of this phone, you might be taking it apart, turning it into a projector or something. I don't know what you could do with it. But the sort of spirit is about essentially exploring the underlying code of different systems, and then finding how you can come in and sort of bend that code, as it were, or use those structures in new and interesting ways. So this is the kind of the general gist of hacker culture. It's slightly different to straightforward activist culture, which also I come from a background of activism. Activist culture tends to be very much more like, here I am, there is a system I don't like, I'm gonna force myself against the system, against power. Okay, so it's like activism is very much geared towards me against powerful system. Hacker culture tends to have some of these elements, but it's sort of coming in more oblique, as it were. So I'm going to explore the system of power, and then I'm going to try and mess with it in certain ways, and sort of bend elements of it, and sort of fuck with it in certain senses. So it's kind of a creative form of creative rebellion, or rebellious creativity. Anyway, I want to kind of stop it there for hacker culture. Actually, one last analogy. So to try and tie it to the financial system and why I called it hacking the future of money. This phone right here, if you see how this is structured, it's a black box, okay? And we interact with this thing via an interface. So we touch this thing on this box, and it does stuff for us, right? So the structure is designed to be, you have a passive relationship with something you don't quite understand. You don't know what happens behind the scenes when you're interacting with this interface, unless you're actually a person who does the coding and so on. But let's assume you don't know that. And actually, something like the financial system has a very similar feel to it. You have these certain interfaces that you interact with. So you go into the banking branch and you do something, or you go into your internet bank and you do something with these interfaces, and then you don't know what happens behind the scenes. Something goes on, and then something else. But you're very sort of passive in the process in general. If you wanted to try and essentially start breaking down these structures, what you'd have to do is you have to take them apart. So in the case of this phone, you'd start to unscrew it, you'd start to explore the various elements of it and discover the layers and the interactions and the components, and you would no longer see it as just a black box. You would start to see it as a series of interacting components. Okay, a system. You would start to perceive the connections. And from that point, you could then start to have power in that system and start to create your own versions of it and so on. And I guess there's a similar, to extend this analogy to the financial sector, again, it appears to us as a black box. In order to start to feel some sense of empowerment relative to it, you've got to basically go in and explore it, uncover the layers, and actually start to get a clear picture in your head of it being an interacting system that impacts everything around you. And then you can start to decide where you want to make interventions, as it were. Is that analogy really roughly clear to you guys? Okay. I mean, you don't have to take this analogy, it's just a sort of useful thing for me. I personally worked in the financial sector for a couple of years. For this particular reason. I was very interested to explore the internal dynamics of these systems. I actually came from an activist background. I'm from South Africa originally, but I discovered that in a lot of sort of left-wing culture, there was not very much knowledge about these large and powerful organizations. Often it's actually, people deliberately stay away from them. It's just kind of to maintain some kind of purity. But I was always like, no, fuck this, I want to go and actually explore this thing, discover what's going on. So I ended up working as a derivatives broker in the city of London, which is the financial sector in London. And this is basically, brokers they work with traders and investment banks, okay? So, and derivatives are these giant bets in the financial markets. We can go into that if you're interested. The basic point was this was an exploration process to try and uncover the internal dynamics of the system. And actually yesterday I was supposed to give a talk on gonzo anthropology, which is a sort of immersive experiences and systems of power where you want to go and discover what's going on in some sort of with the military or some weapons company or whatever, it's advertising industry, whatever you want to discover something about this this approach is of actually immersing yourself in those systems to explore them rather than just reading about them. This was the approach I generally took in the financial sector, and I still do it to this day. Okay, but what I'm going to do now, rather than, I can talk about my personal experiences in the financial sector, should you so wish, but maybe I'll leave that to the end. I'm going to try and extend this, or go along with this analogy of, you know, if you want to understand the black box, you've got to start to uncover the layers and the interacting elements of it. So I'm going to try and break down the financial sector into its most simple components, so that you can then try to see where you might make interventions. And just before I start, does anybody sense that I feel like they're really familiar with the financial sector, or like or experts at it, or have some kind of like, okay, this guy, that's cool. Anybody else? Does anybody feel like deeply alienated by the financial sector? Okay, all right. Do any of you take part in any kind of like activist movements around sort of economic stuff? And all right, do any of you sort of like have intuitively negative feelings, like not necessarily overtly negative, but some kind of like slightly uneasy, slightly negative feelings to when you think about finance? Okay, a lot of people have this. And actually, yeah, as I said, like, to many people in society, the financial sector appears as this like thing you have to do something with. You don't quite understand it, and it's got some kind of like uneasy feeling about it. What do you guys, what intuitively do you sense is like problems of the financial sector? Like, what sort of things make you worried? Okay, so the top financiers make an enormous amount of money relative to the rest of the world, for seemingly not much more effort. Actually, often lesser effort. This is an ironic part of the economic system: is the people who do the most actual labor tend to make the least money. So, and if you can position yourself in the right point in an economic structure, you can extract huge amounts of rent, which is essentially like money way in excess of what you've actually done. And if you're on the lower rungs of the economic structure, you will do a ton of work and get much less than what you actually should. So this is, you can disagree with this, but this is around economic inequality. So a lot of people sense the financial sector is implicated somehow in economic inequality. Any other sort of sense to it?
It's like the feudal system. There are the serfs who work very hard. And I don't know. I feel like it is almost slavery. The way it is working for the few.
Yeah, almost slavery. Well, the interesting thing about modern economic structures is that unlike original slavery, there's no sort of ambiguity. It's like you literally are enslaved, right? Whereas in modern economic structures, people often have the perception that they're free, and perception that they're these individual agents in economic systems making choices, right? But if you ever actually like zoom out, you realize that the choices are very constrained, and actually you have no choice but to make certain choices. At least within narrow bands, all right? And this is what you'll easily see if you stand in New York City, for example, or in San Francisco, wherever. In the morning, you'll see all these people literally being sucked into the economy. They're being dragged in by labor contracts. They have no choice, right? So you can literally see them streaming out of the transport system. There's no actual choice process going on. It's a coercive process, and you have to do it. Okay, so basically, like our modern economies are characterized by choice within narrow bands. That then appears as individual freedom, whereas slavery was overtly not like that, right? But we can imagine it as a kind of, yeah, absolutely. Any more senses of what's wrong with finance? Perverse incentives. Yeah, this is a sense that you get rewarded for doing dubious things in the financial sector, such as taking on too much risk, and there's debates on why that's the case. Often it's related to the sheer political power the financial sector has. The fact that it can be protected from prosecutions of various sorts, and the fact that it's implicated in the political structure. Anything else? Say again? So extreme short-termism in economies, this idea that market systems in general tend to not be able to incorporate long-term dynamics into them. All right, so it's like, what do I demand right now? All right, I can't conceive of something in 40 years' time. It doesn't factor into the choice process in any modern economy. Similar with finance, there's this aside distinction differences, but one of the big problems of finance is it's hardwired towards ecological unsustainability. All right, it's the way that the financial sector distributes money often is predicated upon environmental destruction or conversion of natural wilderness into products, okay, for consumption. And this is the general process of the turning of the economy, turns what was once natural resources into wealth. Okay, via financial companies. So unsustainability of finance is another big element, and the short term is another of that. Let's talk about it, right? So, in the UK, where I'm based, there's an amazing crossover between the political elites and the economic elites, right? Especially, and the economic elites, the elites of the economic elites are the financial elites in the UK. It dominates the economy. The US has got a slightly different balance, but essentially they're the same people, often, right? They go to the same schools, and I say this term "they" with a certain degree of. I'm wary about positioning financial sector people as somehow different to everyone else. Many ordinary people work in the financial sector. The point is that if you happen to start to find yourself in those top rungs, you tend to be finding yourself alongside political elites as well, or you're part of that power structure. It doesn't mean that people who work in the financial sector are somehow evil or something, but de facto you are in a position of power as soon as you get into those roles. Okay, any last reflections before we start to go into student loan debt, debt slavery? Yes. Okay, derivatives. So extreme indebtedness is a problem in the financial sector. So we're basically taking on, and indebtedness means you're trading the ability to obtain something now in exchange for a future burden upon yourself, all right, that you're going to have to return. Now that can be positive, but the debt's an interesting thing because, for example, if you're a very powerful player, you can get debt on very good terms. You can get debt for very, very cheap, do tons of stuff, and actually make a huge amount of money from taking on debt, what they call leverage in the financial sector. So powerful hedge funds, for example, are very good at getting extreme amounts of debt on very good terms, making an enormous amount of money from that, and then repaying the debt and basically taking extreme returns from that. If, however, you are a marginalized, impoverished person, you get debt on incredibly bad terms, it sucks the life out of you and essentially spits you out of the system. And that with bankruptcy, right? So there's an extraction process that occurs. So debt, the power dynamics of debt are very interesting. Derivatives we can go into a bit later, which are essentially these bets that amplify risk in financial systems. Oh, yeah. Well, sort of. We'll discuss. Any more? Okay. Final. Okay. You want to go? People make about human beings. Yeah, both of you. You first and you. Sorry? Yeah. So you make a point about the racial and gender dynamics of it, is that right? Yeah, well, I mean, the positions of power in society tend to be monopolized by those who seek it out and have most access to it, so you'll tend to find they're occupied by white men, old white men, in the financial sector. And there are subtle changes that have occurred over time. Original finance was very much old men, like these guys, like the old boys of finance, right? Especially in the UK, because the original old London-based financial sector. Over time, it's shifted in certain ways. Actually, places like Goldman Sachs are quite interesting. Like, it's a very powerful organization. They're not so much interested in that kind of old politics. They just want to obtain the most. They poach all the highest scoring graduates, basically, and they don't really care about anything to do with who they are or what their race is or what their gender is. But they create this kind of transnational elite So they'll take all the best people from India, they'll take all the best people from China, they'll take all the best people from everywhere, luring with lots of money, and they create this kind of like floating global elite that flies on planes a lot everywhere, and they actually exist on a level above. And so it's not just, you know, rich white American men. It's a kind of like slightly broader group. But yes, and this is echoes other things in society and corporate power structures more generally. Okay, I think we're gonna. Any last points? You wanted to say something else, and then.
Well, I was just gonna say the level of consciousness of people to finance.
The level
of consciousness.
The level of consciousness.
Directly, like a lot of the assumptions you make in finance are more rational. Like we're disconnected from this.
Yeah.
And I feel like a lot of that is just like people's internal bullshit gets systematized.
Yeah, interesting. Yeah. So.
I'm gonna be a dick and go out drinking and make lots of money, and then not really care about the system because I'm just in it for myself.
Yeah, I mean, the anthropology of finance is quite interesting because people do quite a lot of studies on the internal cultures, and different financial organizations build different financial cultures internal to them. And the thing about a corporation is once you've created an internal culture to a corporation, it's incredibly hard to change. All right. Think about even like a basic household or some like basic group that has an internal sort of social structure. If you want to change how that social structure works, you essentially have to freeze the organization, push pause, reorganize it, and then push play again to go on. But if you have an organization with 10,000 people and already there's a certain way of operating and they've started to get used to a certain culture, you cannot stop that organization for a number of months to somehow reorganize the culture. So once these cultures get embedded, they linger on for years. And a lot of banks right now, one of the big problems they have is all their employees are incentivized in these short-term ways and have come to expect certain things. They've built up internal expectations in the culture. Yeah, so trying to like get rid of that culture is a very, very difficult element. So we can go into that a little bit later. Do you want to make a final point? Sorry? Yep. Let's start with perpetual growth after we go into the layers of finance section. Okay. So what I want to do now, I want to zoom out and build up the financial sector from the ground, well, from the atmosphere down to the earth and that. I'll explain. Okay. So if you want to understand the economy more generally, you should always start with the simplest possible component. Okay. The one thing we know is we have a planet. Okay. So this is how all economies start. There is an atmosphere and there is a planet. Okay. Now we zoom in. Right? There's an ecological system. All right? There are biological creatures that interact with each other. Okay? And that's what we call an ecology. All right? So this is the basic components of everything. We have plants, and then we have other types of creatures. Humans are one part of that system. Okay? A particular type of biological entity that relies upon plants to exist. Okay? This is the base level of the economy. Okay. Does anybody disagree with this? Okay. Always remember this. Whenever you're faced with some like finance person like jabbering like complicated sounding shit at you, always remember that everything is based upon the planet and people and plants and other creatures. Okay. Nothing else exists without that. Okay. Now, humans are kind of interesting because we have language abilities and therefore can build up culture and certain sort of cognitive stuff. I'm not an expert in all the dynamics of that, but we can form essentially social organizations and quite sort of complex ideas, which is what we sometimes refer to loosely as culture. There's these sort of modes of operation, social operations, okay? One element of that is production. So the ability to get together and make things, okay? Now, production is the base level way that we survive in any economy, okay? It is the base of all human economies, okay? Essentially, production involves a few things. You use your body, okay? Physical labor. You use your mind, mental labor. You use communication between yourselves, all right? You might use technology, something that augments your body, all right? and you apply that to natural resources. Okay, so let's think about making a photocopy of something. You walk across to a machine with a piece of paper that's derived from trees, and you think about it, and then you make a photocopy, all right? You're using all these elements, you've produced something from this photocopy, okay? Almost every single thing you see around you comes from this process. Can anybody think of something that doesn't come from this? At least in our sort of human economies. Okay.
Meteorites.
Meteorites are not in the economy.
They get sold. You pick them up off the ground and sell them.
There we go. You use your body applied to a natural resource from the earth.
Well, it's on college.
Yeah. No, that's you doing that. You're producing something. You're using energy, using your labor to go get something. Okay. Now, this is sort of level one of any economy. From that point, you then have to decide how you distribute this stuff. Okay. Now, in what we call subsistence economies, basically people produce stuff and then they use it themselves. All right. They are self-sufficient. And actually, in these economies that are self-sufficient, you do not actually even need exchange. You might have some sort of marginal exchange on the sides, but it's not the dominant part of how you operate. You basically produce what you then will consume. In these economies, though, people often assume that exchange is the default mode of economic distribution. But there are other modes of economic distribution that have historically been very prevalent. One of them is patronage. In old school societies, basically powerful people would literally extract stuff and redistribute it, okay? There's no exchange process going on. It's like, I'm in a position of power, I take something from the production, the communal production, and I decide who gets it, okay? Alternatively, you have gifting systems. So that's where you say, I have produced something and now I'm going to give it to you, okay? I do not demand anything back. I will distribute it to you, okay? You can slightly alter a gift system by putting in a implicit expectation that you will then at some point in the future return that gift to the person, right? And that's what we call reciprocity. It's a form of exchange. Pure gifts tend to exist when there are power dynamics. So for example, like grandparents relative to grandchildren, the grandparents often like give something to a grandchild without expecting anything back. I don't know if you like feel like if your grandparents give you something, you have to then go somehow like give something back. Somebody said, was behind the fence. Whereas with your friends, reciprocity kicks in big time. That's where like, if you don't give stuff back that your friends have given to you, they start to feel like you're not their friend anymore. Right? So if they're buying you beers all the time and you don't do that, the friendship relationship starts to break down. So reciprocity relationships we tend to find between people who are considered social equals. Okay. Now these are forms of exchange, and actually reciprocity is one of the main things that binds together communities. Right? It's sort of and actually it's symbiosis, you'll see it all over the place. Okay. So these are some modes of economic distribution. From there, we can think about exchange. So exchange is the dominant mode of economic distribution in a market economy. Okay. Does this kind of clear to people so far? All right. Production, and then how you distribute stuff that you produce. In popular imagination, the original mode of economic exchange was barter. Okay. It's like this weird thing. It's like, I will only give you something if you give me something, right? If you think about barter, it's one of the least trust, it's the lowest trust economic relationship you can possibly have. Okay, it's like, I have this right here. If you don't give me that thing, I'm not going to give this to you. Okay, and then you like make this weird like interaction and then back away from each other. Okay, it's like, and ironically, barter is always positioned as the original way that early humans did exchange. And it's complete bullshit, this idea. Early human societies were characterized by patronage, gift systems, and reciprocity. Barter did not form a core part of any original human economy. Okay.
Across language groups.
Across groups that didn't know each other, sure, but not internal to any human society or any internal group. Okay.
So it was always the cellular interaction of our smaller human societies was trade and barter.
Where different groups meet. Sure. Or like, for example, when people are strangers to each other and there's low trust, then you need to engage in these forms of exchange like that.
So
Okay.
early on we say group, we're talking about 200 people tops, right?
Yeah, for example. Okay. But let's not go into that. I'm trying to sort of construct the basis of money systems right now. Okay. So, monetary exchange is a very particular type of exchange. Okay. unlike this concept of barter, which involves this weird thing where you take one good that you produce and you exchange it for something else that somebody else has produced, monetary exchange involves the exchange of a token for something that somebody else has produced, okay? And that token gives you access to other people's labor. All right, now think about it. If you go buy a coffee from somebody, you're essentially walking into a coffee shop. You are saying, please give me something you've produced, and actually a lot of other people have produced as well down the production line. And in exchange, I'll give you this weird abstract token that enables you to go get a beer or something from somebody else, okay? So the core of monetary exchange involves the goods and services being exchanged for claims upon goods and services. Okay, future claims upon goods and services. Does that ring true with you guys? Okay, and this is a very good way to think about money. One of the best things you can do when you think about money is to stop thinking about money as a store of value. This idea that money is a store of value is one of the core sort of bullshit myths of modern economics. Value is the things that we produce, all right? It is the things we actually use and produce, all right? Money systems are claims upon those things, all right? It's that token that you give over that gives somebody access to value, okay? It's different to the actual value itself. And we did a money burning last night over there inside that urn. You can actually go see some burnt US dollars. And an interesting question to ask yourself, what happens when you burn money? Do you destroy any value? Did we destroy anything?
Possible value.
You change the relationship between
Destroyed access to it.
We destroyed our personal access to value. We didn't actually destroy anything. I mean, you can maybe, pedantically speaking, we talk about the paper, which was actually something that was made. But let's imagine we factored that out of the situation. We didn't destroy any value. We simply destroyed our claims upon it, our ability to gain access to it. All right? And ironically, what we actually did was we made everybody else's claims worth slightly more. All right? Because suddenly there's a fewer claims in the economy. That's what we call deflation. And we're not going to that right now. So you can think about money systems as these claims upon value, and a monetary exchange is the process whereby you obtain things of value in exchange for giving somebody a claim upon value. All right. And labor. Okay, any immediate questions? We're going to go into the next stage. Just like following through. I'm aware that like money talk and finance talk is pretty hardcore. Okay, that was money one. And we're not going to talk about the history of money or like how my came to be like this. But that's like part one of money. Okay, claim upon value. Now, most money we actually use in society, well, a lot of money we use in society is not technically speaking the same as that. It's something else. It's called commercial bank money. All right. So we have this like idea in our head that floats there of just like generic money, like the US dollar, okay? And if you ever like type into Google images like money, you'll just see all these like pictures of notes and coins, like all these images. In reality, most of your money doesn't take this form. What form does it take? Yeah, well, okay. And ones and zeros are essentially, they're not actually ones and zeros, they're actually like atomic structures on hard drive systems that are then read as ones and zeros. And essentially, these are modern day forms of recording. So they're data structures, okay? So they're basically, somebody's like essentially written something down. Okay, so most of our money exists as data entries. Did you want to say something over there? Okay, and I'm going to show you how this works. This is the modern banking system. Let's imagine that money one. That's sort of like generic like idea of money. And let's use a quintessential sort of like idea about banking, where you're going to go and you're going to deposit your money in a bank. Okay. Now there's this bullshit story about banks. You'll find out in the public, or the sort of sphere, where they say, what is it? They say banks take your money and then they lend it out to other people. All right, and then they get interest back and they give you some interest back. This is not at all how the banking system works. This is one of the most bullshit ideas about banking ever, okay? And I'm going to show you why. Oh, I'm going to try to show you why. I'm going to figure out how I'm going to show you. I actually need two whiteboards, but anyway, I'll just look at this here. I'm gonna try and illustrate the dark arts of banking at this.
Hey, can I ask a quick question? I gotta walk away for like 5 minutes because I got some responsibilities, but I really appreciate you breaking down the financial system. Are you gonna get into like points of insertion, how to actually dismantle, interrupt?
We're gonna do that. The first section is just gonna be like these layers, and then we're gonna try and look at like different attempts to break those. Yeah, cool, man. All right, cool. So I'm gonna make this. I, as a bank, have an account at the central bank. It's where I keep my money. Okay. Now, when you give me money, all right. Who wants to give me money? You want to give me money? Okay. How much do you want to deposit? $100. Okay. And what's your name? Okay. I'm gonna open up an account for you. Well, I'm gonna have to write in it. So, here's my database. Okay. I'm gonna basically just stick a line here and say, it's Mia, right? Mia gave me 100. I'm gonna write down 100. And I'm gonna say, I owe you. Okay. You gave me 100, and now you can get it from me. I owe it to you. Okay. So this is an IOU. I will take the 100 and I'm gonna put it in my central bank account. Okay. Over here. So I can make it hold it over here. Okay. Now that's somewhere else. That's the Federal Reserve or whatever central bank you want to think about. Now that's where the money actually is. Okay. But I tell you this here on your internet bank. Right. This is what you see. I owe you 100. Now, technically speaking, this is actually your money now. That is not your money. Okay. This is a promise I've made to you. To saying you can get that should you wish. Okay? This is the form the majority of your money takes. Most of your money is promises made by banks against their central bank accounts. Okay? They're promising you access to it should you wish. Alright. Does that kind of make sense? Do you see what I've done suddenly? I've actually just doubled the money supply. Right there. There's now 200 units of money in operation, whereas previously there might have been 100 that you gave me. Okay? So there's 100 there, but there's 100 here. What you experience as your money is my promises. Okay? And actually, so people, what you should rather call your money, what bank do you bank with? Oh, First National. You do not have US dollars. You have First National IOUs for US dollars. But you generically will call it a US dollar because that's how the system's been constructed. Okay. Now, I'm gonna end with that. Yesterday we were looking at payment systems, which is how basically when you want to move this money around, the banks basically just edit it out and change the numbers and then change stuff at the central banks as well between themselves. Okay. I'm not going to go too much into that right now. But the key thing that modern banks are able to do is that they can what we call the credit creation of money process, which is they can keep that amount there in the central bank fixed, so it stays static, okay, whilst they simultaneously make more promises here. Okay, so this is what happens when you get a loan or a mortgage. Okay, who wants to get something from me? You want a mortgage of some sort, or maybe a small loan? I'm going to give you 5,000. What's your name? Tom. I'm just going to add an entry for you in my database of promises I've made. Okay. Here, 500. I owe you. You will now see that in your bank account. You can get 500 from me if you wish. Notice what's happened though. Nothing changed there. Alright? I simply just made new promises against it. Now the money supply is significantly higher. But nothing, I just created it, literally, by writing in a data entry and making a promise against my reserves. Okay? This is what banks are doing all the time. They operate an interesting and subtle dark art of making promises against their reserves. And they can make as many promises as they want, provided they don't fuck up the system. Alright? they operate a sort of fine balance. You can't make too many of these, otherwise people will lose confidence in the system. All right. And the key thing about this loan process, though, is notice I've made you a short-term promise. In your mind, you think about it as being, it's my money, all right? But what it technically is a promise I've made to you to be able to get that money, right? And what I do in exchange for that is I extract something else from you. I extract a long-term promise from you for something like, I don't know, 550 maybe? All right, in a separate system over here, you owe me. Okay. I owe you 500. You owe me 550 in the long term. In the short term, I owe you 500, but you owe me 550 in a year's time. Okay. This is how banks operate and how they extract value from society. Okay. And this is the monetary system. Now, this is not necessarily like a negative thing. Depending on who you are, you can decide what you think about that. The key thing to remember, though, is banks do not take your money and lend it to other people. They have money in their central bank accounts from various sources, and then they make promises against it. All right? And that's the system. Okay, there's no sort of like, it goes through me and out again and back out again. It's like, no, I have two databases. I have central bank account, and then I have a database that makes promises against it. And that's how you will experience money in society. Okay. And then you will move it around by the payment system by sending me messages and asking me to sort of to edit this databases. Okay. Was that like roughly clear enough on this? This is the world of commercial banking. All right, commercial banks form the base level money supply. So we look at money one and money two. So money one is the sort of generic idea of money, just the US dollar. And then we have money two, which is actually how most money often is, which is commercial bank promises for US dollars, which we will then generically call US dollars as well, as if it's the same thing. And roughly speaking, it could be the same thing in certain situations, okay? But it's how the majority of the money supply is actually created. Cool. Any questions on that? I'll have some Coca-Cola.
Does that system also apply to non-Western countries, like undeveloped economies, or like China or India? Brazil?
Different countries have got different combinations of this. In the United Kingdom, for example, 97% of the money supply exists as data entries on bank databases. All right, 3% of the money supply is actually on the central bank reserves. Okay. Now the central bank can also create money. Central bank can write in digits into their database that it controls, but the majority of it's actually created in these databases the banks themselves make. All right, the promises they make. Okay. But you're right. The different countries have got different levels, and in lesser developed countries they've got weaker financial systems. They will tend to have much more central bank money.
Is the central bank aware of all the promises that each bank makes and they have control?
Yeah, so the question is the central bank aware? The central bank's core role is to try and make sure the system doesn't fuck up, all right? The central bank knows very well what's going on, right? And their job is to rein in the banks and make sure they're actually not overextending themselves. And this is what the central bank's always trying to do when it's like changing interest rates or trying to do, like, make all these kind of rules around stuff. It's trying to sort of, in a sense, constrain the banks or steer the issuance of money. For example, with quantitative easing, that's one thing that the central bank will essentially write in digits into the bank's accounts. Okay. And then say, we want you to now make more promises out in the form of credit to society. Right? So it's trying to manipulate the money supply. And the reason for this, going back to this distinction between claims upon value and value itself, when the human body's producing things, is you can influence the underlying human production by changing the claims upon it, right? So you alter the money supply, you can actually alter how much is produced in society, okay? So this is the weird, like, to and fro dynamic. So you say let's boost the money supply, it'll inspire people, we will essentially mobilize people to work, okay? We'll be sending out more claims upon their labor into society, and then you're getting the banks to distribute it out and to make them work, all right? Whilst trying to stop them from working. So it's very imprecise, so there's always kind of interrelations. So the dark arts of monetary policy are about the interaction between real human labor and then the claims upon it, these contractual claims upon it, these money claims upon it, okay? And that's a sort of good way to start thinking about monetary policy, all right? this used to be called fractional reserve, but more accurately speaking, credit creation of money. OCC. The American system, I am not an expert on. Tell us about the OCC, though. Okay, let's leave that for now. Let's stick to basic stuff rather than the particularities of particular systems. Okay, I'm going to move on. Point to grasp though: original money and then secondary money, which is what you experience in your bank account, which is basically bank promises, short-term promises to you, bank IOUs, and this is essentially how you experience most money. And if you think about the original idea of money as a claim upon value, you can think about this as a claim upon value. All right. So it's now a secondary claim. You have a claim upon a bank for that money there, which is a claim upon value. All right. So you have a claim upon value. All right. This is like you're building layers of finance. Okay. Now once you have this base level money supply, you can start to add new contracts on top of it. Okay, you can start to write new claims. And that's where you get to this thing we call financial exchange. And I'm going to try and end fairly soon so we can have some more to go into this stuff. I don't want to go too long. Once you have the base level money supply, you can start to write contracts for anything around finance. You can say, okay, you give me money into my bank account, and in exchange, I'll give you a claim upon future money. All right? And this is the dark, also that investment banks are doing. All right? They're saying, okay, let's say Silicon Valley. Take your bank account, Mr. Investor, transfer money to my bank account, okay, Silicon Valley startup bank account. In exchange, I'll give you a share certificate that gives you access to money in the future that comes from whatever I do now, okay? So finance in this sense is the writing of contracts about the future in order to mobilize human action now. Okay, so we'll get all these programmers to do a bunch of stuff, right, by making promises to investors for the future. Those investors will give us money now to hire those programmers in exchange for these claims upon what those programmers will produce in the future. Does that make sense? All right, you're writing contracts about the future in order to mobilize human actions now, and in particular contracts about money. All right, you give me money now, I'll give you money in the future. All right, what we call equity financing is where you're getting ownership in a business. Give me money now, I will give you ownership in a business, and you will get dividends in the future as an owner. What we call debt finance is give me money now, and then you will get interest in the future, but you won't own my business. Okay.
If the programmers aren't getting money, but they're getting time, they're trading time for stock.
Yeah, sweat equity.
Is there an alternative to that model? Because there's an entire business model behind startups. Is there a better way to do that?
Let's not go into that now. The core concept I want you to grasp right now is around the idea of financial exchange, which is, think about ordinary exchange. Ordinary exchange is I give you money now in exchange for something I can use right now, all right? A actual value, all right? Financial exchange is I give you money now in exchange for future money, which will enable me to get things, okay? And that's the sort of like the core art of what investment banks are trying to mobilize in society. They go around let's say a large copper mine in the DRC, Democratic Republic of Congo. They say we want to basically get a whole bunch of people to go here to this particular part of the jungle. We want them to clear the jungle out, dig a large hole, and start basically making a very large copper mine. How do we do that? We need to mobilize their labor with money, all right? But where do we get this money from? We will go to these investors. We will say, if you give us this money right now, we will allow you to take a cut of what the future copper sold. Okay. And that could be a debt contract, it could be an equity contract. There's any number of ways you can structure those contracts. But if the investment bank can convince those investors to do that, essentially what you'll do, you'll mobilize human labor to go into the middle of the DRC, cut down a forest, dig a giant hole in the ground, and make a copper mine. Okay? and then that copper will be taken out, it will be sold on global markets, and the investors who financed the original thing will take a cut of that over time. Okay, so they'll slowly extract value from that. Okay, and that's basically the world of investment banking and okay. Final two layers I want to go through. All right, this is what I just talked about there was built on top of the commercial bank system, where you have essentially people writing new contracts on top of that, debt contracts and equity contracts. Now you have what we call investment funds, which are funds that go in and buy up a lot of those contracts, essentially those financial instruments, or fund them, like multiple financial instruments. Okay. I want to say something very complicated quickly. You guys ready for something really complicated? Okay, we started off with value that we produced, right? So here's this is Coca-Cola. These things we actually like have real intrinsic utility to us. Then we had money, which is a claim upon value, all right? Then we had bank money, which is a claim upon that money, a claim upon value, all right? Then we had this future contract we just written, which is, if you give me money now, I will give you a claim upon bank money. So I'll give you a claim upon future claims upon value. All right? You're seeing how you're structuring all these linkages of chains that are eventually linked back into human labor and resources. Okay? So that's like a share contract, we'll have that, or a debt contract, we'll have that. Now, that's a single financial instrument. Now you can have multiple financial instruments, and you can have another body now, like BlackRock Investment Fund, that says, if you give us money, we will give you access to multiple financial instruments. So we will give you a claim upon multiple future claims upon claims upon value. All right? And then you might have a fund that owns shares in other funds. All right? So now we'll have, if you give us money into this fund of funds, you will have a claim upon multiple vehicles that have claims upon multiple financial instruments, which are essentially claims upon claims upon claims upon value. All right. So you see how you're sort of starting to structure out these like spider web things of, or like rhizome-like claims upon huge amounts of stuff in society. Does this like resemble anything from 2007 at all? These sort of huge alienating structures, which you could buy a share in one of these, like a collateralized debt obligation, which essentially gives you an access point into thousands of things on the ground. All right, it gives you a claim upon some other vehicle that has a claim upon another vehicle that has 10,000 mortgages sitting in it. Okay, and then it might be it might have claims on multiple of these vehicles, so these CDO squares, all these types of things. Essentially, you can write contracts to give people access to these chains of value. Right. This is how money is moving around in circuits in the system. I want to kind of cut that off there. Does any sort of immediate reflections of that? Does that make sense? Okay, it's actually much more complicated than that, because internal to single corporations, they have entire internal financial systems as well. So but I will leave that for a bit. And then derivatives. What are derivatives? Okay, derivatives are bets on all those things I just talked about. Okay, bets upon money, bets upon financial instruments, bets upon funds. All right. So once you have all these like layers of claims in the economy, you can then bet on them from the side. Okay, and that's essentially what the derivative markets are. So you want to try and distinguish in your minds between the original financial instruments, which will be very, very abstract and very, very scaled up and alienating, and like these huge like structured funds that give you access to like 10,000 other things essentially. But you can then have a side system where you basically bet with somebody else about the performance of that fund. Okay, and that then forms a new financial linkage, this bet upon this other thing. Okay.
What's the difference between, say, a derivative and going and playing a slot machine? Like, why is one allowed and the other not quite the acceptable?
Difference between a derivative and a slot machine. Yeah.
Why is one allowed?
I mean, a slot machine would be generally considered pure arbitrary betting, right?
But you can
derivatives people will tend to have some agenda or some kind of like sort of process they're going through to think about why they want to make these bets. So yeah, I don't know. Maybe something like blackjack or more sort of like intellectual game would work better as an analogy. Sports betting actually works quite well as a thing for derivatives. So thinking about a horse race. A horse race is the underlying reality. Okay, there are horses running around a track. All right. If you own the horse, let's say you have an equity stake in it. You are the owner of this thing. You might make money if it wins. Okay, that's a direct economic relationship tied into the horse. Okay, but you might be completely unrelated to the horse and on the side make a bet with your friend about the outcome of a horse race. Okay, you've now developed a secondary economic system that relates that uses the primary one as its reference point. All right, and you say, well, if the horse wins, you know, I'll give you this amount of money. If it loses, you give me this amount of money, whatever. Like you structure a bet like that, or it might be a very advanced bet, which is like, you know, if it wins for the first 2 laps and then lags back, we'll have different things that kick in this bet of ours. So some of these like really like exotic structured derivatives that investment banks have are these types of very bespoke bets, which are like, if the price of oil goes this much, you won't get anything. But if it goes above this much, then this new thing will kick in at this point. All right, and then we will give you something. But if something else happens, then that will be null and void. Or like, so these are structured options and structured products and derivatives they're all working on. And then investment banks are going into other markets to try and protect themselves from the bets that they just made. So much like a sports betting bookie will, you guys call them bookies here? What do you call them? Yeah, they take bets from one person, and then they will offset those bets against somebody else. To say, okay, this person wants to bet on this horse. I will bet with them, but I don't actually want to make I don't want to take positions with the horse. I want somebody else who can make another opposite bet with me. That will basically mean that no matter what happens in this horse race, I will make money. Okay, and these guys are betting against each other through me. The investment bank traders, that's their big job. It's like take bets from somebody there about what's going to happen to, for example, the level of inflation or interest rates or something like whatever type of bet they want to make. Find somebody else on the other side. And essentially take a position in the middle where no matter what happens, you'll make a fuck ton of money. Okay, and at the sheer scale that these things happen, an individual trader, you only need one trader to make these bets, right? But the scale of these bets is so huge that even if they are making a very small margin, for an individual person, it's an enormous amount of money. All right, so a large corporation needs to make a bet of probably 300 million in size, okay, to cover some sort of risk it has, will take some kind of thing, and then like say a hedge fund on the other side of this bet will take on the other 300 million, right? So there's going to be 300 million bet at play. If you're even taking a tiny sliver of that as the person in the middle, that's a lot of money, right? You could be making 10 million, but for an individual person, 10 million is a lot of money. For a corporation, it's nothing. All right, this is why you see all these investment bankers like zooming around in like fast cars and shit, because they've managed to insert themselves in a huge scaled economic system into these gatekeeper positions that enable them to extract enormous amounts of money due to the sheer scale of these operations. Okay, does that make sense? Okay, I'm going to cut it off now. Any final questions on the basic structure of the financial sector? I want to quickly do one quick section on ways you can then go in and start to disrupt these elements. I know this is probably a bit of a quick cut-off, but... Yeah. Yeah. So you're saying these derivatives will impact the economy. Okay. No, what I just try to do right now is I try to construct all these layers of finance, like money one, money two, financial instruments, complex corporations that have multiple financial instruments, funds that have like tons of these whole portfolios of them, funds of funds. You know, so you start to like have these like layers and layers. But then what you've got to think about is that these layers will then start to intertwine themselves with each other. All right. So the derivatives are like the top layer. These are bets upon all stuff. These will like all start to get intermingled. All right. So like stuff that starts to happen at the top will then like force out stuff at the bottom will become implicated in it. So this is why during the financial crisis, entire like normal economic activities, like of ordinary sort of jobs would get fucked up by these like abstract other things that are going on. Okay, but conceptually you can form these sort of layered structures and say, in order for these higher order ones to exist, you first have to have these lower order economic forms. Okay, and then they become intermingled. Okay, is that cool? Okay. How you guys doing? It's quite a heavy topic for a hot day. Okay, we have basically 25 minutes left. I just want to now very quickly sketch out for 10 minutes some of the sort of main things people try to target in this system. Money one layer. There's a whole world around people trying to make alternative money systems. Okay, this kind of like blends like money one and money two. Those base level layers of an economy. So yesterday, if you saw my talk on alternative currency systems, there's a bunch of different ways people try to alter the base level currencies. I don't really have time to go into that. Unfortunately, if you missed that one yesterday, well, it's too bad. But there are a whole bunch of these, a world of alternative currency systems. If you want to go read up about them, there's plenty of literature online. Essentially, though, the activism in this case is aimed at these lower levels of financing. What we're going to do to alter the system is to change the money system, right? The base level money. So, for example, local currencies are an example of this. Let's create localize the currency system. So something about the local scale will change the level of economic exploitation, all right? Will do something new, all right? Stuff like cryptocurrencies were trying to target money one and money two. So they're trying to change the dynamics of who controls these account systems, these ledger systems that the banks have, right? So they're saying, rather than the banks maintaining these big databases that keep score of your money, we'll decentralize this out, and we'll create these structures which allow people to collectively keep account of what money they have, all right? So decentralized database systems. Now, that's a particular intervention in the money system. It's different to a local currency. It's not trying to do the same thing. They're trying to change the power dynamics of who controls the databases that keep score of your money. Okay, that's the Bitcoin system, right? Another really cool alternative money system you should check out are called mutual credit systems, which are essentially ways people can create their own money without relying on banks, simply by setting up a spreadsheet among themselves. Right? In this room, we could do it very easily. We put up a spreadsheet. We write down all of our names, and then we start to do stuff for each other. What was your name again? Sorry, Josh. So I do something for Josh. I push in energy into the system, like my labor power goes into the system. He gets something from me, and then on a database we record this. We say Brett did +5 of work. You have to think of an abstract unit to measure it, but like Brett gets +5, Josh gets -5 in the system, right? Now, if none of the rest of us were here, that would be a bilateral relationship between me and Josh. He'd essentially be in debt to me, okay? I did something to you and we've measured it, and now you need to get out of debt. You're in a -5. You need to do something for me. But in a mutual credit system, you socialize this debt and you socialize the credit as well, which says, rather than me only being able to get back from Josh, I can go to anybody else in the system to get back from them, all right? And rather than him having to pay me back, he can pay back his debt with anybody else, okay? So this is essentially how money systems work. There are webs of obligations between people. And essentially, if you want to survive in any economy, you know this. At one point, you're pushing in energy, all right, when you're working. And another point, you're taking out energy when you're getting things, okay? So there's these basically mutually interdependent relationships between people that money systems mediate. And you can create that on an Excel spreadsheet by simply writing down people's names, recording these obligations. And we're actively participating. Yeah, like a few months ago, I was working on a mutual credit system in Belgrade in Serbia. They tend to be very cool for working at quite sort of localized regional scales. There's a really awesome mutual credit system run by a friend of mine in Sardinia called Symbiosis, where he literally has hundreds of thousands of transactions that they do between small businesses and other people who would generally be excluded by the banking system, or at least get bank finance on very poor terms. So go check out Symbiosis if you're interested in seeing how this model works. I can. Yeah, but come speak now first. We can do it. Actually, the New Economics Foundation in the UK is quite good. In the US, there's actually an equivalent which is called, I think it's the New Economics something else, which is a sister body. But there's a few that kind of like interesting bodies around there. All right. There's a few other things you can take on with money systems, but if you want to target like slightly higher levels, you can start to target other elements of banks, all right? The world of alternative banking is targeting the commercial bank layer, all right? Saying, okay, fine, maybe banks create money with the sort of pushing out these promises, but maybe we want to change the dynamics of how they get to do that. Okay, there's a few basic elements you can change. There's this world that's called ethical banking, which says, okay, what banks need is a mission statement that says, when you're doing this process, you know, pushing out money, you only want to extend credit to certain types of organizations. Okay, for example, environmentally friendly organizations, you know, energy efficient buildings, companies that do not support human rights abuses. Okay, various ethical criteria that you will apply to your lending processes. That's paradigm one, ethical banking. Paradigm two is cooperative banking, which says, okay, we're not going to necessarily say what you can lend to, but we're going to change the ownership structure of the bank. So rather than it be controlled by private shareholders that have an interest in extracting profit, we make everybody who uses the bank a member and have it collectively owned by its members. And actually, through changing the ownership structure, the behavior of the bank will become more positive. I note that's slightly different to explicitly saying the bank has to lend something in particular. It's more the cooperative tradition, which says the positive behavior stems from people having a personal stake in something. Okay. There's a third paradigm, which is around local banking, which says one of the big problems of global banks is that they're such large scale and so alienated from reality that they actually are unable to make good lending decisions or unable to actually understand what's going on or support local businesses and things like that. And if you want to actually combat that, you need to reduce the scale of the bank and make them concentrate in particular regions. So Germany, for example, has a lot of these types of banks going on, which say, you have a mandate to lend in this particular area, and your job is to develop good relationships with people in this area. And through this process of this geographical restriction, the positive behavior will emerge. Okay, so those are these three basic paradigms of altering banks: ethical banking, cooperative banking, and geographically restricted local banking. Okay, I'm wondering how much time I've got left. 10, 20 minutes. Okay, let me do one last section and then we can go into some reflections and questions. Okay, so people are trying to alter the money system. Then you can try to alter elements of the banking system. Then there's a whole other world of how people are trying to target the big investment banks and these funds that are built on top of the system. Okay, so the ethical fund movement or sustainable fund management is one of these targets. But also things like the divestment movement. Have you guys come across the divestment movement? Divestment movement's targeting the fund management layer, one of these like much higher order layers, saying, you large-scale institutional investors, we want you to start directing your